All right, folks, here we are on Trading That again. We've got Cas Daamen in the house. We did an amazing podcast where he breaks down how he went from part-time trader to full-time trader, managing not just other people's money, but he works for a prop firm and he works for a hedge fund as well. And he's starting his own hedge fund. So to find out all about how he's doing it, how he's done it, and the lessons he's taken across the last 18 months, go and check out the link under the show. But for now, we're going to jump in and he's going to walk through one of the recent trades he took this week and talk you through how it worked. So over to you, Cas.
All right, so we're looking at the euro dollar chart, and I'm a swing trader. So let me explain a bit about my style. I'm a swing trader. I use the daily time frame. I use the hourly time frame. We're currently looking at the hourly time frame, and as you can see, there are some random lines for you. To me, they're not random. So let's go over this trade. I took a long trade in the euro dollar, and these two red lines are my entries. One entry was in this area, one entry was here. This was my target, the upper green line, and the lower green line was my stop loss. Now, why did I take this trade? I'm not going to give the exact rules because they are for me, but I will explain the concepts I look at so you can get something for your own trading as well. I use something called the Wyckoff method. That's like one of the concepts that goes into my strategy. And in this area, this is a clear accumulation range. And if you're not familiar with it, you can Google it, Wyckoff accumulation range. But basically what happens is that you get a downtrend, and the accumulation range is the ending of the downtrend and the beginning of a new uptrend. And what's important about accumulation ranges is these boundaries of these ranges. So when you get a range, you always get boundaries of ranges, and above and below those boundaries, you often get stacking of limit orders. If it's a stop or if it's a buy stop or whatever it may be, you always get some stacking of orders there. And what interests me is what happens when we get, basically when we hit those orders. So below the range, you often get stops from buyers, or you get people that want to sell the breakout to the downside. Stops from a buyer are a seller. So all in all, you get a lot of selling pressure as soon as the low of the range breaks. We can see that the low of the range breaks, and as soon as the low of the range breaks, we just stop. And then a few hours later, we just aggressively shoot up. Now, what's interesting is that as soon as we break the other side of the range, so you got this swing high and this swing high, we continue. So there's completely different price behavior here than when we break the upside of the range. You can just see we continue aggressively shooting up. And that really tells me a story like, okay, we broke the downside of the range and we don't shoot up. We don't go down. We just stay there and then we get back into the range. But here, we keep continuing, and that tells me that demand is really aggressive, demand is really dominant, and I basically look to play the next leg up. And I have two different entries. One was at the breakout area, so as soon as we break out and we accept above the range, that's when I entered one position, and the other one is at the retest area. Stop was below here. The reason being is that if you take a look at the levels, you can see here, we got multiple touches. And this to me is like the most important area, because this is the last bit of resistance we made before we broke out of the entire range. And prices like to retest those areas before going up. So I want my stop out of the way of this level. And to me, we also had a minor level of structure here. So my stop went below there. One thing I want to explain about this is that often people trade breakouts and they trade it like this. So you get your range, then in this case, you get your false breakout, and then you get your breakout. And very often people look to buy the retest of this area. But what I found over time is that price actually likes to retest the last bit of structure before we broke out. So you often get squeezed if you enter here, and this is often the best area. And what I also noticed when people trade breakouts, just like I do, is that they buy this level, then they put the stop somewhere there, and then when price just retests the other level and goes up, they're out of the trade while the idea was good. So I always am very safe with my stops. Like, I place it in an area where I know I'm wrong on the trade. And in this case, like if price retests to this area, I'm not out of the trade. If it retests to this area, I'm not out of the trade. And then if it shoots up, I capture the move. So I don't have these tight stops. And I think that's really different from most people. Because if you have very tight stops, like you will get stopped out so easily. And this trade, like if I show you, the first position was almost 160 pips stop loss, 160 pips. And this one around 100 pips. And people might be like, wow, that's too wide, it's too wide. I don't care what people think, this works for me. And I think if people just give a bit more room to the trades, they will find that they win more often and their performance goes up. And the target was around 200 pips. So my risk reward is only like 1 to 1.5, something like that on both these positions. But because I win more often than not, my win rate on these types of setups is around 65 to 70%. So I win more often than I lose, and I win a bit more than I lose. And that's all it. Like no crazy risk to reward ratios, no small stop losses, just a few concepts that work, clean rules about it, back tested it, and I just repeat it. And that's this trade, like really boring chart, nothing fancy going on, but this is what I do.
And one question on this before we wrap up here. So what do you do around the risk management on the two trades that you've got going in, and how does that sort of impact you if, for example, the first one hits, the second one doesn't on like consecutive trades, and then all of a sudden you get, you know, two that just blow through and both positions get taken out at a stop loss?
Yeah. So what I do is, let's say I risk 2% per idea. So per idea, then 1% would be in this entry, 1% in the other one. And yeah, sometimes you get that you don't get a fill on the second trade. So the price just shoots up. And then the other time you get like price fills both trades and it goes to your stop. Like these things happen, but I know on average over the long term that this makes me the most amount of money in the safest way possible for my strategy. So yeah, in the short term, these things might happen. That's true. But in the long term, this just works. And it's all about the long term, basically.
And I suppose that lower entry trade, if you get that right, that's going to be more of a 2-to-1, or maybe even a 2.5 to 1 in this case. What is the...
Yeah, let's see.
2.7
R.
Yeah.
And then the other one was 1.3, something like that.
Yeah. Okay. So that's interesting. That's interesting to know, and I'm sure people will get some benefit out of knowing that. Okay. Well, look, Cas, that's fantastic. Let's just wrap this show up. So, what's the best way for the people to find out more about you?
cdfxtrading.com is my website. I've got a lot of articles there. You can find podcasts that I went on, and you can always contact me also via the website. So basically everything is on my website, cdfxtrading.com.
Brilliant. Well, look, once again, thank you to Cas. If you do want to check out the podcast that I mentioned at the start, there's a link below the video. Go and click on that, and you'll get links to all of Cas's other stuff as well. Guys, do remember, whilst you're down there clicking away, hit subscribe, hit like, click on that notifications bell, click all, and you'll get future videos like this coming your way. All right, we'll see you in the next one. Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description.